Hello, everyone, and welcome to Financial Revelations. I'm your host, David Spransky, coming to you from the hallowed halls of Edgewater Investment Group in Avon, Ohio. You can always reach out to us. All you have to do is email joshua@epsf.com. You can get to us on Twitter at skibucks1, and you can hear us every Thursday morning on Moody Radio, WCRF 103.3. From 8 a.m. to 9 a.m., we take questions, comments. We get some really good questions there, stuff that I love to talk about. I don't know what the questions are before they come to me. It's just all kind of like the luck of the draw. So whatever we get, we get. It's kind of like a box of chocolates. And, of course, you could download the Moody app and listen to us anywhere in the world. And we have people that do listen to the show from all over the world. A lot of military people listen on military posts. They must be working third shift because I know what time it is there. So I love that. We want to help people out. We want to help you out. And if there's something that we could do to help you, I would encourage you to call me, to reach out to me. You could also call us, really, with a telephone, 1-800-344-2534. And we'll answer that call and either address the question during the podcast or maybe, if you're lucky, call you back. So last Friday, Fed Chair Powell gave a short speech from where else but Jackson Hole, Wyoming. Why are they in Jackson Hole, Wyoming, you may ask? I don't really know why they go to Jackson Hole, Wyoming. I think when it started in 1982, this meeting that they have every single year, they wanted to get to some place that was kind of hard for the press to follow because Paul Volcker was the Fed chairman. They were in the news every single day. If you remember 1982, interest rates were extremely high. And so they got together with all the Fed bank presidents, the people on the Federal Open Market Committee, all of their lackeys and their research staff, and a lot of big-time money managers were out there. So a lot of people in finance would go out there and they would talk about the economy, and that's continued since 1982. And it has been fairly common for the Fed chairman to give a brief statement or a statement from Jackson Hole on Friday morning. So I guess I'm going to title this edition of Financial Revelations, Why Does the Fed Hate Me? Because Chair Powell came out Friday morning and he gave a brief speech. It was less than 7 minutes, or right about 7 minutes on Friday morning. Short, but very, very impactful because he did a couple of things. One, he invoked the name Arthur Burns. Now, most people are not going to know who Arthur Burns was. Arthur Burns was the Fed chairman for Jimmy Carter. If you remember Jimmy Carter's presidency, it was plagued by economic stupidity, much like the administration that we have now, plagued by economic stupidity, one dumb thing after another. Jimmy Carter is probably one of the nicest people we've ever had as president. I've never met a president, so I don't know, but it would seem like he would be a nice guy. Christian guy, taught Sunday school, seemed like a good family man. Kind of sold out for the Democratic left, but, okay. But Arthur Burns was his Fed chairman. And Arthur Burns, while inflation was rising and fuel was being constricted, a little bit like today, it's not OPEC constricting the fuel, though. It's Russia and the American government because we've killed a lot of pipeline projects. We've killed leasing in federal lands in a lot of places and offshore. So we're constricting. Some of these are self-inflicted gunshot wounds. But Arthur Burns was raising rates, and every time he would get a good piece of data, he would either stop or cut rates. And consequently, inflation never went lower. In fact, it's probably what cost Jimmy Carter the presidency to Ronald Reagan. And if you remember, Ronald Reagan won like 72 states. It wasn't even close. I know there's only 50 states. I think he won 48 states, or maybe it was in the 40s. I don't remember off the top of my head. We're going to find out, though, for sure. And so he does not want to be Arthur Burns. Fed Chair Powell does not want to be known as the second version of Arthur Burns. And he also invoked Arthur Burns' successor, Paul Volcker. Now, this is what kind of shook Wall Street, because Paul Volcker, he raised rates. A 30-year mortgage was at 14% in 1982. That was Paul Volcker. He had to push us into a recession, not once, but twice, 2 recessions to break the back of inflation. Now, I don't know that we're there right now. I don't think we are. It feels a little bit different because given the right set of circumstances and the political acumen, which, by the way, this administration does not have, we could become energy independent again within 18 months. And while you're doing that, you would be bringing fuel prices down every single month. You could get gas here down to $2 a gallon again, even with not being in the pandemic, if we had the right political structure. And basically that's anybody but who's in right now. Well, Paul Volcker was really tough, and he was tough on the economy. And when Chair Powell invoked both of those names, Wall Street realized what was coming. Higher rates for a longer period of time. The market was really hoping for a Fed pivot, which meant, well, maybe we don't need higher rates. Maybe things are getting better. And it is true. Energy prices have come down. However, that's because mainly the Strategic Petroleum Reserve has been pilfered, and we dumped millions of barrels of oil onto the market, and it did have a positive effect. If you increase the supply, the price is going to go down, and that is what we did. So why does Chair Powell have to be so tough all of a sudden? Well, his legacy is at risk. It's in jeopardy. He doesn't want to be Arthur Burns II. He doesn't want to be a footnote in history about Arthur Burns and Jay Powell. He doesn't want to do that. And I think he allowed himself to get used by the administration in 2021 with the bailout plan that the administration pushed that we didn't really need. We were coming out of COVID. We were out of COVID economically. Now, COVID's still around, and in China today, they just locked down a city of about 3 million people, just locked down. Nobody in, nobody out. You can still produce things there if your business is in a closed loop, and that means that the workers live at the plant. They can't leave. They can't go back to their families. They live there, and Foxconn is there, for instance. There's a lot of big production there. So, and I think the Fed Chair Powell, feels like he got hoodwinked and bamboozled, kind of victimized by the administration in that bailout plan when they all thought, I'm sure you remember, inflation is transitory. I have a hat in my office that says inflation is not transitory. I should have worn it for this, but I forgot about it. He really got bamboozled by them. I think he took them at their word, and they dumped a lot of money into the economy. And the Fed is not going to lose this battle with inflation. They can't, because once the psychology of inflation gets rooted into the American psychology, people make very different economic decisions, and they don't trust what's coming out of Washington. They don't trust it now. And, I love it. You guys know I love America. I was in the Army. I love this country. I go all over the place. I'll be in Brazil again this year. And when I come back, I'm going to be so happy to be back here in the States because we have it all. But it's okay to have a healthy mistrust of your government. They don't always tell the truth. They don't necessarily owe us the truth about everything. And I don't even get mad when a president, sometimes they're talking for domestic consumption and sometimes they're talking for another audience that is not us. I get that. They don't owe us the truth. They have a whole different set of circumstances that they're working with. But the administration continues to put money into the economy. We signed the Inflation Reduction Act. I'm doing air quotes if you're just listening and you're not watching. It has nothing to do with inflation. It's not going to lower inflation. In fact, it could make inflation worse. It's really the Green New Deal. It's a climate bill. That's what it is. There is no climate change. Climate change is a hoax. Climates do change. I don't think it's man-made. And if it were real, if that were really happening, former presidents wouldn't be buying oceanfront properties 30 feet from the ocean in Hawaii if sea levels were really rising. So that's going to throw a lot of money into an already constricted economy. That's inflationary. The $10,000 or $20,000 of loan forgiveness that the government's about to do, which I don't think is legal, and I hope it goes to court because I think it's unconstitutional for the president to do that. But let's say it does happen. That's inflationary. You're throwing money at the economy again in a constricted supply. We have enough demand. Demand is not our problem. People are going and buying and shopping and consuming. We have a supply issue. The Fed controls demand. They're about to put a shrink wrap on demand. They're about to close that off. Did you know that Los Angeles is voting on a universal basic income of $1,000 a month? That's inflationary. The Pennsylvania governor, this is just goes to show you how much they don't understand economics. The governor of Pennsylvania, Tom Wolf, said yesterday that in order to help people deal with inflation, we're going to give them an extra $2,000 a month in relief. That's inflationary. That makes the problem worse. They tried this in the Weimar Republic. It made it worse. It's just making it worse. And the Fed is going to contract the economy. And the more that the government does things like throw money at it, it's making the Fed's job even worse. I said a couple of weeks ago that the Inflation Reduction Act is putting the Fed on a collision course with the federal government, and that's exactly what's happening. And the Fed is going to outdo the federal government. They could raise rates as high as they want, and they're going to, for higher for longer. And that's what the market did not want to hear. So here's what I think is going to happen. The market's had a week of losses last week. It's doing it again today. We'll probably lose tomorrow. I think we may get close to retesting those June lows, but I don't think we'll go through them. And I think when the Fed has their meeting and they do raise by 75 basis points, the market is going to have to love it. And even though we don't like higher interest rates, it compresses margins, it brings profits down. There are places where we can make money in that environment, and that's what we have to be looking for. So dividend-paying stocks, potentially oil and gas, because it's going to get way more expensive over the winter, especially in places like Europe where heating bills, just energy in general, is 10 to 15 times higher than last year. Not 10 to 15%, 15 times higher in Denmark, right now in Denmark. Now, I know this is a small example, okay, and it's one example, and it's not like this everywhere, so I don't want to overstate something, but to charge your Tesla at a charging station in Denmark today, it cost $100. That's how expensive electricity is in Europe right now. And it's going across the board in Europe. Germany is next, then France. Now, France produces a lot of electricity. They're the highest producer of electricity via nuclear, but they still rely on Russia. Most of Europe relies on Russia for its energy, natural gas and oil, and Russia is shutting off Nord Stream 1 for servicing issues. This is a shot across the bow from Russia to say, we're not going to go quietly in Ukraine. We're going to make you pay. And I'm telling you, we have a moral imperative to burn more fossil fuels. We are going to starve people if we don't do this. We're going to make life hard on people if we don't do this. People are going to die from being cold. There's going to be stories in the paper this year. It won't start here. It'll start in Europe, of finding people dead in their houses and their apartments because they couldn't afford to heat it, or the heat got shut off because it was so expensive. And then it's going to come here probably in January, February. You may see some of this because heating bills are going to skyrocket. It's probably what's going to lead people to go back to the office because they're not going to want to heat their house. They're going to turn their thermostats down to 58 during the day, and it's still going to be 5 times as expensive as it was last year. If we don't change something, if we go along with this new Green Deal, we are in real trouble. So November's coming, and I think there's going to be a full-scale repudiation of the Biden administration at the ballot box. I think the House is definitely going to the Republicans. Now, I don't want to rely on the Republicans to do it better because politicians, Well, they're politicians, and their goals aren't always our goals. And yes, there's a lot of Democrats and a lot of Republicans who love America and want to do the best, but it seems like this new Green Deal that the Democrats and the kind of the liberal wing of the Democratic Party are really pushing for is anti-American. It's socialist at worst and probably communist a little bit at best. So we have to make a change, and it has to start in November. And then 2 years later, it's going to happen again because we're probably going to go into a recession that could last 6 to 8 months, and that's going to be remembered. That's not going to be forgotten. And again, they're self-inflicted wounds. That's why the Fed is acting the way it's acting, because it has to right now. It's been put in that position. If you look back at when inflation started, it was about 19 months ago. I don't know what else happened 19 months ago that could coincide with it, but throwing money at a tight supply market is not the solution, and that's what we're doing. So Chair Powell is about to go double-fisted, double-barreled at interest rates. I want you to be ready for it. If your portfolio is suffering, you can call us. We'll review it for you. You never have to work with us. We talk to everybody. There's no obligation to work with us if you call here. I want you to feel like we are a resource for you, but we're not the only one. You know, if there's somebody in your church that's in finance, look at them, okay? And the other thing, too, is that if you're a supporter of missions, inflation's bad here, but it's even worse in other countries. 65% inflation in Argentina. It's about 15% in Brazil. So if you have missionaries there, I don't know what it is in Africa right now, but I'm sure they have it too, because they're dealing with the same supply constraints that we are. They just have, their economies are a lot less diverse, so it tends to affect them a lot more, a lot faster. We may have to consider raising the amount of money that we're giving those people just so they can eat. I don't want our missionaries starving to death, and I know you don't either. But if it's within your power, if you can do that without taking away from your home church, I want you to consider raising your support level for missionaries overseas. Maybe ask them, what's the cost of living like where you're at right now? Has it gone up? Maybe they might be living in the one place where it hasn't changed. But I doubt it. So be thinking about that. I am David Safransky. This is Financial Revelations, and I will see you next week.